Guys, welcome to Artist Perspective. So in this video, we in the previous video we have understood what is IFSC, what are the business that they do, and what is alternate investment fund, what is category 3 of alternate investment fund. So let us begin with the amendments. This is purely taxability, taxation point. The first amendment is about the alternate investment fund only. It says that if the alternate investment fund transfer any of its capital asset, the transfer will not be treated as transfer and will be exempt from capital gain. So it is a big wow for alternate investment funds, because they big businesses in transfer of capital assets. So short term or long term capital assets, so they are into this business. So for them the full transaction is being exempted from taxation. So it is a big boost for the alternate investment funds which are established in IFSC. So also there is one condition, that all the unit holders of that alternate investment fund should be non-resident, then only the transfer will be exempt. So it is purely an incentive to for the non-residents or the investment funds to have the investors from outside India. So that's a big amendment which will help the hedge funds or security trading funds in India. The second amendment is, see, I have mentioned in the previous video that the one of the big business that can come to IFSC is banking or treasury. The banking, where banking in terms where it borrows money in external market, that is not from Indian domestic funds but external market, external borrowings. It could be in bonds or any other borrowing. So if any of the unit which is established in IFSC is borrowing from external market, okay, the interest will be paid to that person or non-resident entity from which we are borrowing. So if the entity is in IFSC and it borrows money from outside India, the whole interest will be exempt in the hands of that non-resident, and there will be no taxability in of such interest. So it completely what it says, that giving exemption to the interest income for the non-residents only if the entity is having registered in IFSC. So it can happen that a MasterCard or a Merrill Lynch can establish in India in IFSC. It can borrow from its counterpart and pays interest without payment of any TDS, or not the or such interest income will not be taxable in the hands of that branch, the branch outside the India. However, there was a provision in income tax that if the entity is outside the IFSC, it will have to pay TDS on such interest, and the interest income will be taxable in the hands of its counterpart. So this is one big amendment. So third one is, see, we know that where the entity, any Indian company declares its dividend, okay, so it is exempt in the hands of the shareholder. However, the company is required to pay dividend distribution tax, right? But there was earlier a section which says that if the entity is in IFSC and it declares dividend or pays dividend, then that entity is not required to pay dividend distribution tax. The condition was the income, the dividend is declared from the income of current year, okay, not from the income of accumulated profits, okay. So what was the law, that if an entity is registered in IFSC, it declares dividend from its current profits, then that company is not required to pay dividend distribution tax. However, if it pays dividend from its accumulated profits, then dividend will be the company is required to pay dividend distribution tax. This was the law. How they have amended or gave a boost to this entities, that they have just tinkered with the word current year with any previous year. So if now the company which is established in IFSC, if they declare dividend even from the accumulated profits, okay, then also there will be no dividend distribution taxes. So let us understand this. Okay, the law, it says, okay, current year, previous year. What is the motto of this current or previous year? See, it used to happen that where a company, if the company earns income, okay, and it pays dividend, the income tax says, okay, you are earning income and you are paying your taxes on such income, no need to pay dividend distribution tax. But if you are not earning any income, you are incurring losses in the current year, but you have profits from the previous years, and you now want to repatriate that profit to your shareholders which are situated outside India. So now the money of such entity is being transferred to outside India. The money which used to held in India is being transferred to outside India. So in that case, the income tax wanted money or dividend distribution taxation, but now they have relaxed this. They said that even if you incur loss in current year, if you have sufficient profits which you want to repatriate, you can very well repatriate without payment of any taxation. So this is a very welcome move for the industry, the entities outside or registered in IFSC. If they are not in IFSC, they will have to pay dividend distribution taxes. So this is again a very big amendment, and it needs a good amount of daring for the income tax authority to waive such dividend distribution taxation on repatriation. So this is a big move. So, but there is also one condition, that all the unit holders should be non-residents. Okay, or okay. So no, ignore that all the unit holders. There is one another amendment which says that if the mutual fund is situated in IFSC, is established in IFSC, then that mutual fund is not required to pay dividend distribution taxation. Okay, currently if the mutual fund is there, if it pays dividend to its unit holders, it has to pay dividend distribution taxation. But if the mutual fund is in IFSC, entity established in IFSC, and it pays dividends, and all the unit holders are non-resident, then there is no dividend distribution taxation. So it is a kind of pass-through of dividend or pass-through entity. They have made this pass-through in the mutual fund, for the mutual fund industry. So it will definitely boost the mutual fund industry to shift from Mumbai to Gujarat. And you guys who are into this profession or of a finance profession, there is a good opportunity in this gift city. If you are in CA or CFA or MBA finance, okay, so there are a lot of opportunities in fintech which are coming. So for this video, it's the last amendment of this IFSC, related to IFSC, which says that if you are a chartered accountant or doing a chartered accountancy course, you must be aware of this term tax holiday. So what is tax holiday? The tax department of the country has suggested that if you are doing business, you need not pay any tax for the next 10 years or next 5 years. This is called tax holiday. So earlier, what was the rule? Any entity which is in IFSC, okay, if they are doing business, they will be eligible for tax holiday. For the first 5 years, 100% of profits will be exempt. For the next 5 years, 50% of profits will be exempt. Okay, it means if I am in an entity registered in IFSC, I have incurred or I have generated profits for first of my 5 years, I'll pay no tax on it. If I from the 6th year I'm earning profits, and I have to pay 50% tax on 50% of the profits. So it is again not a very welcome thing. because for the first 5 years, if the business for the first 2 years the business may not earn revenue, but after that if it is earning revenue, then the income will actually be earned after the 3-4 years, and after 3-4 years you are charging 50% of taxation on such revenue or the profits. So what the income tax has done, that they have amended this and said, out of 15 years, first 15 years, any 10 years no taxation on any of your profits, any 10 years you choose, but that should be continuous 10 years. Okay, suppose I have started an entity in IFSC. For the next 15 years I will have to pay no tax, provided I have to select the 10 years out of this 15 years. Suppose I am generating revenue, good revenue from the fourth year, then I can select this fourth to next 14th year. I won't pay any tax from and for the first 3 years I will have to pay tax, and the last 1 year I will have to pay tax. So this is a very good set of amendments. So what were the amendments? First one is the transfer of capital asset by the alternate investment funds. Okay, what will be the capital asset for this hedge funds? The securities which they are trading, either it be short term or long term. Transfer of capital asset will not be regarded as transfer. So it is a very big move. Okay, so second one was the interest payment to the counterparts. Okay, if a Merrill Lynch or a bank of or another bank is registered in IFSC, and it is borrowing money from its counterpart, it need not have to pay any TDS, or the other person, the and counterpart is not required to show its income, interest income. So that was second. Third was about dividend distribution taxation, and fourth was about the dividend distribution taxation by the mutual funds, and fifth was the profit link, that is tax holidays, first 10 years tax holidays, or the 10 years out of 15 years, 10 years of tax holiday. So thank you guys, this is all about the third episode, which is a very positive amendment, set of amendments for IFSC, which we know right now that IFSC contribute 1/5 of the economy. Okay, so thank you for watching, and I think I should not do delays in making videos, and I'll do the necessary. Thank you.